there, everybody. Welcome to each one of you, and it is time to get started. I really appreciate you being right on time today. We have traders attending from just about everywhere, all around the world, and wherever you are, I hope it's a good weekend for you and that the virus problems aren't too bad. I was hoping we'd be through with them by now, but that's not the case. I know these are still tough times for many people, and we do hope that you and your family and loved ones are well and safe. This is Craig at Max Trading. Chris is here. Eusebio is here, and we're very glad to include you as part of the Max community today. Other traders will join us later by video, and we welcome you also. This COVID thing has become a very long, drawn-out process, but I hope that you having information about a trading system that's proven over a 14-year history, it's reliable, it's effective, I hope that can be of help to you and your family. This really is a very good time to learn a profitable trend-following system, and we are delighted to have the opportunity to show it to you today. And on top of that, you'll get to learn a few things because Eusebio is teaching 3 really important trading tips. And even if you have seen them before or you're familiar with them, it still will be a very helpful review for you. So this is going to be a very good webinar for all of us, wherever you are in your trading journey. And if this is not your first time with us, it's still a good thing to get updated with all the latest information and have a very good review experience. We remain very pleased with the ongoing performance of the Max trading system. It seems to just get better and better, so we're really happy about that. It has now been live traded for about 14 years, so we know it's a game changer. Whatever level of skill you may have as a trader, the Max trading system will be an improvement in your results. More than 2,000 traders have graduated from a Max course. If you think about it, that's quite a bit of training. And over all that time, we have learned how to do it extremely well. I can assure you that you will get the help that you need. And in fact, we are approaching our 76th Max Standard course. And that's where you can learn this very profitable, very flexible system. And one, by the way, that is excellent for all markets and all time frames, whatever you prefer. So if you like the adrenaline rush of the really fast charts, let's say from 1 minute up to 5 minutes, then you'll be great with Max Trading. Or if you're like me and you perform better on a bit slower chart, perhaps 15 or 30 minutes, Max is for you. And if you just simply don't have the time for a lot of trading, or you don't like sitting in front of your charts for several hours, then you will really appreciate a 4-hour, 8-hour, or perhaps a daily chart. And Max is very excellent on those charts as well. And if your preferred market is YM or ES or maybe the DAX, Forex pairs, commodities, options, stocks, Max will be great for you. Very flexible, very powerful, very profitable. And along with all of that, you also get a great trading community. And many of you will be taking a Max course for the first time with us in just a few days now. And so you will have, along with that, a lifetime Max membership. And we look forward to trading with you for many years yet to come. The Max community also gives a wealth of ongoing support and unending assistance to all members, whether you're currently in a course or not. All of that support is available to you, plus the free trading workshops that come at least 2 or 3 times every month. And this allows you to continue building your skills, improving your skills over time. From time to time, we need something new and fresh because the markets are always in a state of flux. The changes come frequently, it seems like, and as the characteristics of the markets change, our trading has to change a bit to keep up. And Eusebio has helped us to meet this challenge. He has developed 2 extremely important indicators. which we have now added to every Max trading course. The first is the Enhanced Trade Format Indicator. We call it the ETF. And along with that, the Companion. The Companion is our price directional bias indicator, extremely helpful to any style of trading. And combined with the ETF, it's just a wonderful combination. So you get all of this, professional training, professional indicators. You'll learn correct price action analysis. You'll become knowledgeable about global context. You'll have a very supportive community, lifetime access to instructors, and all of these things will give you a wonderful opportunity. Really, it's the perfect opportunity to learn trading that will actually make a difference in your life. And no, we don't expect you to just simply take our word for it. We know there's a lot of scammers in the trading business, a lot of outright thieves in some cases. So we want you to do due diligence, and we want you to see it for yourself. And because you have registered for this webinar, I will be sending you an invitation for a free seat at our upcoming live trading webinar in just a few days now, so be watching for that in upcoming emails. And we'll trade the price action. We'll use strictly, exclusively the Max system, so you will get to see it on real-time charts where nothing can be hidden, nothing can be exaggerated. It's just right there for anyone to see. So I hope you can attend or at least watch the video playback. So thanks again for attending today. If you have questions, ask anytime using the question panel and go to webinar. We'll try to make sure that every question gets answered before we leave today. And remember, there's a door prize drawing coming up during our Q&A time, so you have an opportunity to win a Max trading course. That's worth hanging around for, and I hope that you can. Eusebio is indeed the developer of the Enhanced Trade Format Indicator, along with the Companion, makes many contributions to the Max trading system, and has himself traded Max full-time for many years now. And he'll tell us a little more about his background, his experience, but I want you to realize right up front, he is the perfect choice to share with us the details about Max trading. You're listening in just a moment to a phenomenal trader, a skilled teacher, and one who really loves helping his fellow traders. Thank you so much, Eusebio. As always, we really appreciate everything that you do. And please take a few minutes to show us the Max today. The microphone is yours.
Thank you very much, Craig, for this introduction. Hello, everyone. Welcome to this presentation about the Max trading system. I also welcome all the participants who will watch the recorded video because, as usual, all our activities are always recorded, whether it is a presentation webinar, whether it is a workshop or a practice session or a training session, of course. And just to answer quickly John's questions, so we are 3 partners in the Max trading system. Personally, I live in France. My friend Craig lives in USA, in Texas, and my friend Chris lives in New Zealand, so at Christchurch. So just to show you that we are an international team. So who am I? Let me give you a small background. Who am I? In fact, I am a past software engineer, and I have worked in the IT services industry for around 30 years, and the last 15 years in the bank sector, in important banks here in Europe, which has given me the opportunity to work with several bank traders. And until 2008, I was a part-time trader, being interested in almost all the financial market. The stock market, of course, as many of you, most probably, the option market, the futures market, and since 2000, I have specialized in the forex market, the currencies market. And in 2008, I had the opportunity to take the course with the Max trading system with Jim, the designer, Jim Pruitt, the designer of the Max trading system. And since 2008, I decided to become a full-time trader. And then, unfortunately, when in 2009 Jim passed away, his assistant, his partners, Chris and Craig, have asked me if I would be interested to teach the Max. And so it has been a favor for me to accept to become the teacher of the Max. So this is for my small background. And now let's describe what the MAX is. As Craig has mentioned in his presentation, the MAX trading system is perfect for, in fact, anyone who is interested in trading, whether you are already an experienced trader looking for consistency in your trading process, consistency in your profits generation, whether you are a full-time trader wanting another or wanting to multiply your profit, because you will see this is very specific to the MAX trading system. If you are already educated in trading but still struggling to become profitable, sometimes it can take a long time to become profitable, to understand some key points in the trading process. Whether you are a new trader, what we call a newbie, so the MAX is certainly for you. And so with the MAX, there are some great advantages. You can trade from home. You can trade to plan in order to plan for your retirement. You can trade in order to generate some additional extra income. So there are a lot of objectives you can fulfill with the MAX, and Chris will describe a little more about these objectives after my presentation. Historically, the MAX, as I have said previously, has been designed by Dr. James Pruitt, known by his student as Tiger, and he has developed a tremendous system with three main concepts. The MAX, in fact, is the acronym for three concepts. The M stands for momentum. And to be accurate, I should say momentum and volatility. We want indeed to see enough momentum and enough volatility before considering taking a trade. The A stands for acceleration, not seeing the price accelerating in the direction of the trend we want to trade, but accelerating the profits we want to extract from the trend we are trading by a scaling process. How do we add to an existing position, to an initial position, in order to progressively build a larger position so that we make more profits when we close the entire position? And indeed, the X stands for exit, consequently. And we have two types of exit, as I will describe later, partial exit and a final exit. And so the MAX is, as I have said, essentially a trend-following system, but containing, of course, some aspect about counter-trend trading and breakout trading, which are all different styles of trading. But the MAX trading system is also completed with a very, very important and strict trade risk management and money management approach. I will not repeat, as Craig has said, the MAX can be applied to any time frame and to any market. So before starting to describe some concept of the MAX through some examples, recent examples, let me teach you, just to thank you for your presence today, let me teach you three tips we are using in the MAX, by the way, and you can apply yourself in your system if you have already a trading system you are exploiting. And these three tips concern divergences, long bars, and how to reduce the risk while in a trade. And all these three tips combine together, in fact, to improve any trading system. I suppose you all know what a divergence is. When we analyze the structure of a price movement, like you see on this chart, I have taken the Euro CAD in a downtrend, and you analyze the relationship of this behavior with the behavior of an oscillator, which is a momentum indicator, like the stochastic of the RSI. That indicator, we call it more, in a more short way, the STO-RSI. You know that the divergence is present in the following, or at least the basic divergence or the regular divergence, because there are also hidden divergences, but we don't use the hidden divergences. They are simply confirmation of a prevailing trend. So the regular divergence tells the following approach. When we see in a downtrend two successive lower lows in the price, and at the same time two higher lows in the momentum oscillator, so we have a divergence. Now, when I say two lower lows in the price and two higher lows in the oscillator, this is the most basic form of a divergence. There are other types of divergence. We may have, for example, an exact double bottom in the price. We may have lower lows in the price and a double bottom in the STO-RSI. And we may have several other more complex divergences. In the MAX, we teach, in fact, 4 types of divergences. We can name them, so the regular divergence, the persistent divergence, the external divergence, and the group divergence. But when we have a divergence, we always wait for the bar. In this case, you can see here this blue candle I'm showing with my cursor. At the close of this candle, we have indeed two lower lows in the price, and we have two higher lows in the RSI. So we have that divergence. We call that blue candle an exit setup. And we always consider an exit setup not as a way to predict that the price will move further higher, but to observe that now a risk appears in the trade we are handling. And when such a risk appears, we need to define how we will handle that risk, how we will reduce that risk. In fact, the setup bar was this one, not this one, this one. So we define consequently an exit level, and if the price follows through and hit that level, we close the trade, but not necessarily the entire trade. We close a partial trade. For example, it may be 1/2 of the trade, it can be 1/3 of the trade. It depends how you consider your trade is made of. You can consider that your trade is made of 2 units, 3 units, 4 units. And so with the max we use 2 units. And so we close 1 unit. Later on, when we see another divergence, then we close another unit. And then if we have the opportunity to open another trade, when another divergence will appear, we close another unit, and we continue that way, exit after exit, until each trade eventually is closed. This is an example in a downtrend, but we can do exactly the same approach in an uptrend. And so whenever we have this time higher highs in the price with lower highs in the oscillator, momentum oscillator, then we have again a risk appearing in the trade we are handling, because indeed as long as the price moves upward, we are making a potential profit. But when the price is making a pullback, is retracing, a portion of that profit is disappearing. And if the price moves lower than our entry level, we are even in a losing position. And a pullback is always a risk. And so we need to know when to control that risk, when to reduce that risk. And so this is how we consider an exit setup. So how to control the risk, at least partially. And so we define consequently an exit level, and if the price follows through, hits that level, we make a partial exit. And so there are two possibilities when we make a partial exit with such an exit technique. Either the exit is made with a profit, in which case this profit will help to reduce the risk on the remaining position, or we may have a small loss, in which case, should the price continue to go against the trade and hit our stop loss, this will reduce the loss on that losing trade. But most of the time, in fact, on a pure statistical, technical analysis approach with the max has a 75% winning rate, and so we can say that in 75% of the case, the trade will be closed with a profit. A second way to reduce the risk when we are in a trade, so the first one is to bank some profit when the price moves in our favor, or to reduce the loss if the price moves against us. But the second way, which is also a very important aspect in the trade risk management, is to adjust our stop loss. We always associate an initial stop loss with our entry, but as long as the price moves in our favor and following very specific rules, we adjust our stop loss in order either to reduce the risk on the trade or to lock more profits. It's obvious, for example, that when we make that partial MX number 1, an MX means a momentum exit, by the way, we have a nice profit, and if we set the stop loss, for example, on this level almost at break even, we have a guaranteed profitable trade. And if we further adjust our stop loss along the movement on the second unit of the trade or on the following units on the trade, then these units will lock more and more profit with that adjusted stop loss until we close the trade. So the divergence is an important exit technique, and each exit technique most of the time will help to bank a profit and so to reduce the risk on the position we are trading. And the second mechanism will be the stop loss adjustment. Of course, all these exit technique and the stop loss adjustment must be made following specific rules. So a second tip you can use, or a third tip in this case, you can use to bank some profit is when a long bar appears along the movement you are trading or along the trend you are trading. A long bar is always a candle, whatever the time frame you trade, is a candle having a length large enough compared to the previous candles, at least 2 times the average length of the previous candles. And such kind of a long bar has 2 possible interpretations. Either it indicates a strong momentum in the price because the power of the intentions of the buyer is important, and so they are in control with a very strong control in the price movement, or it may represent the possibility for an exhaustion, temporarily an exhaustion of the buyers. Because we are trading in the fact we never know the real volume activity, and so it's difficult to make the distinction between a momentum bar or some exhaustion. And so we can consider, however, that because the price has made a long bar and so has nicely progressed in our favor, a long bar represents always a nice profit opportunity should the price retrace. And we observe that 2 out of 3 times the price will indeed make a pullback, and very often a deep pullback and sometimes a trend reversal. And so in this case, which happens so 2 out of 3 times, it's a nice opportunity to bank some profit. And so we have to define, similarly as with the divergence exit technique, an exit level. And if the price follows through and hit that level, so we can make a partial exit. Later on, if we have a divergence or if we have another long bar, we can repeat the same process and close again partially a trade or close the entire rest of the trade. And so the long bar exit technique is a nice technique to bank nice profits. Almost always after a long bar exit technique, your trade will become a risk-free trade or even a guaranteed profitable trade, provided you use also the stop loss adjustment technique. And so these are 3 tips you can use in any trading system, whatever your style of trading. It may be a momentum trading system, a trend following system, a swing trading system, so a scalping system. So use these tips and you will see your profits, so your result improving importantly. So that being said, now let's go into the max itself. And I will explain the max concept or some of the max concept with some recent examples of trade. On this chart, I represent a trade, or 2 trades made with the max primer. The max primer is our most basic approach of the max, which helps to, or which allows the students to get a good idea what the max may be, and if we are legit as a teacher for a trading system. So it's the very basic form of the max with simple entry techniques, simple exit technique, and a simple trade risk management. But it is a profitable system. And so the approach is the following. Whenever we have an entry setup, we open a trade, provided the entry setup is a valid one. An entry setup is simply a specific pattern the price is exhibiting. And we have to validate that entry setup, and we have 3 types of validation. The pattern must be an appropriate pattern. We have to fix the risk of that pattern by adjusting a stop loss or by placing a stop loss on our chart, and we have to control or to check that we are in agreement with the context. And we have 2 types of context. We have a technical context, which is given by our companion indicator, which is this red and green line at the bottom of the screen, which represent what we call the ETF trend or the trend. A green line represents a downtrend. Sorry, a red line represents a downtrend, and a green line represents an uptrend. And so when the slow bias is red and we have a short entry setup, the short entry setup is technically validated by the trend direction. Then at some point, we will recognize an exit setup. We have many exit techniques. With the max primer, we have just a few exit techniques. By the way, the divergence with the Stow-Erosai is such an exit technique. And so when we have such an exit technique, you can see here the Stow-Erosai, when we have such an exit technique, so we close half of the trade. We always consider that a trade is made of 2 units. And when we have an exit setup, we close 1 unit, leaving 1 unit as a running unit. And so for that second unit, we have the possibility to either close that second unit on another exit setup or to wait until the trend reverses in the opposite direction. In this case, I have used the fact that the trend was reversing. But because there is a second context, there is what I call the global context. We call the max bias advantage. The global context consists in considering what the central banks are doing, what the geopoliticals are, and which are influencing the market, and what the fundamentals are telling us, for example, the news releases. And with these 3 types of informations we can analyze in a very detailed way, we can have an idea in which direction the market has the highest priority to move. And so in this case, the global context analysis was telling that it was better to favor the short trades. And so we take the short trade based on our max trading system approach, helped with the technical bias given by the slow bias or the companion indicator, which is this red and green line. And so this indicator, in fact, helps us to time our trade. And so in this case, whenever the indicator turns to green, we ignore the long trade, but later when we have another entry setup with a red slow bias, we can take a second short trade because this short trade is in agreement with the global context. And we operate exactly the same way. When we have an exit setup, we bank some profit or we limit the loss on that unit by closing 1 unit, and later on we close the second unit either on the next exit setup or on the trend reversal. You can see here this down movement made a few days ago, so has given 2 trades, 2 winning trades, and you can see the result. So 98 pips in total for a total of 2.87 to 1 for the reward to risk ratio. And this is for the max primer, which is the basic approach of the max. Now, when we handle that down movement, that downtrend with the max standard, which includes the scaling technique, so scaling and scale out technique, we have a trade which is completely different. We have eventually the same entry setup. With the max standard level, we have several types of entry setup instead of just one with the max primer. And then we have the possibility to add or to make scalings. I have indicated by a short entry number 2, short entry number 3, short entry number 4. And then along that trend, we increase progressively our position, building a larger position. But in the meantime, whenever we have an exit setup which trigger, we also close a portion of the trade. Whenever we have an exit setup and the price follows through and hits our exit level, so we close 1 unit. Whenever we make an entry, we open 2 units. Whenever we make an exit, a momentum exit, we close 1 unit. And so this means that at some point, we will have to consider, for example, when the trend will reverse, we will have to consider closing the remaining position, whatever the number of open units. And in this case, we were left with 3 open units. Indeed, if you count the number of entries, we had 4 entries corresponding to 8 open units, and we had 5 partial exits corresponding to 5 closed units. So we are left with 3 open units we have to close when the trend reversal happens. Now, this unique trade with several entries, multiple entries, and multiple exits, and of course an appropriate stop loss adjustment, produces a profit which is way, way larger than the max primer, in this case almost 400 pips, representing a 12.4 to 1 reward to risk ratio. So almost 5 times the result of the max primer. And this will very be common with the max standard. The max standard will produce a profit which will be 1 to 3 times the profit produced by the max primer. So sometimes not, sometimes it will be only 30%, for example, but very often it will be 1, 2, or 3 times, and sometimes more than the max primer. An example in an uptrend with the Dow Jones. The previous example was Forex pair, but we can trade also the indices, and this is the Dow Jones Industrial Average, and we apply exactly the same process. With the max primer, we have a first entry, one partial exit and the final exit, producing a first winning trade, then a second entry for a second trade, a partial exit, a final exit, and then the trend has given a third opportunity with a third entry, third exit, and the final exit for the third trade, giving so 3 trades, and again 3 winning trade for a nice 2.51 to 1 rework to risk ratio, 192 points on the Dow Jones. The bias was long, so the global context was telling us that we had to favor long trade, and when our slow bias has turned green, so we have taken the long trade, avoiding to take the short trade, which were not really worthwhile. And with the max standard, we have a complete different approach with the scaling technique. That uptrend has given one unique trade, but with multiple entries. First entry, initial entry, second entry, third entry, fourth, fifth, sixth entry. So we had 6 entries and a lot of partial setup, exit setup. You can see 11 partial exit, and then a final exit. So here, giving a nice 656 points, representing an 8.8 to 1 rework to risk ratio. And so, so this was an example on indices. I could have shown other type of instruments. For example, this is quickly, I will not describe the detail. You have understood how this works. But gold, which is a commodity, so a long trade, 2 profitable trades, again, using the slowest to time the entries and our global context indication, and then the same types of trade, but this time with the max standard, giving a profit which was 3 times larger than the result given with the max primer. So the max is essentially a trend-following system. It's very rare with the max now to have trade in a counter-trend movement. So this means that we have to define what a trend is, we have to define what a counter-trend movement is, we have to take into account the market conditions. We don't only have a trend possibility or a counter-trend possibility, we have also to take into account the fact that the price can range. So we call that a consolidation zone or consolidation zone mode. And depending on the price action, depending on the market conditions, either a trend, a counter-trend, a consolidation zone mode, or more globally, a choppy mode, we have to define differently how we handle our entry and sometimes how we handle our exit. Ignoring the market conditions so is often a problem for many traders. So if you ignore the market conditions, expect some difficulties in your trading process. So the max the max courses, in fact the max primer and the max standard, provide method and concept that work. And they work because they have been confronted with the approach by what I call the big boys, the big trader in the big banks. And thanks, I have had that experience with these type of traders. We know that the concepts we are using are working, and during the course we explain why the concepts are working. In fact, we explain in some circumstances how the big boys are operating in the market. So, and our concepts are based on these behaviors. Our course provides training and support in order to help you to reinforce your trading skill, because trading skills to develop is an important aspect in your process of improvement for your trading, but also in the money management. The money management and the trade risk management are other important pillars in any trading system. In fact, there are several pillars we have to develop as skills. the trading strategy itself, a right mindset, the trade risk management and the money management, the global context understanding, and the organization. If you don't have a good organization for your trading process when you trade, so you will have to face some difficulties. So these 5 pillars are extremely important, and each of them correspond to a set of skills we have to develop. And the Max courses give you all the tools and the help, the training, the mentorship to help you develop these skills. But the Max also provide you, and this is a very important point, the confidence in your skill. Through our mentorship approach, our homework, Chris will talk a little more about the homework we assign at the end of each training session, and our free workshop we have every weekend. Every week on the Saturday, we have free practice with our members, with our students, to apply the Max, to explain or to clarify some concept, and to apply these concepts and rules on charts chosen most of the time by the students. They choose the pair, the instrument they want to practice, they choose the time frame, and then we go through the details bar after bar during this practice session. Confidence is important. You have to build confidence not only in the market. You will realize that the market will provide you with a lot of opportunities, more opportunity than you can ever handle. But also confidence in the trading system you are using, in this case the Max trading system, and then confidence in yourself. For the Max, its ability to catch most of all the opportunities the market can give you, and in yourself, in your ability to apply the Max correctly. And this is why the homework are so important aspect in our courses. The homework must be seen as a validation tool, a tool which helps you to convince yourself that what you are doing is correct. And so we present today, I have presented the 2 courses, the Max Primer and the Max Standard. So the Max Primer is really a sample and simple approach of the Max Standard, and the Max Standard is the complete course. In order to help our members to better understand the global context, we provide additional informations. Every week we update our website, which is www.maxtradingsystem.com/newswatch, and Craig or Chris will put the link of this page of our website in the chat area of GoToWebinar or in the question area. So we provide a lot of information every member can access for free, but also if you are not a Max member, these information are free for everyone. If you want to be informed when these informations are updated, so you can put your name and your email address, and so you will be informed as soon as the information is updated. And so we provide a list of all the geopolitical elements which prevail for the moment, and we have to pay attention to them. Then we provide after that what we call our news watch list, a simplified calendar representing only those news which may have an influence in the market in the case of a big surprise. There are a lot of news every day, but many of them have no influence in the Forex. There are only a few of them which may have an influence, and not always only in the case of a big surprise. A big surprise is when we have a release data which is much different, with a big deviation from the forecast. Because as you know, in every economic calendar, you have a forecast of what the news could be. And then after that, we provide what we call the top pairs list. Every week, so we provide the 10 most moving pairs. Because the Max is a trend following system, it makes sense that we have to focus on the trending pairs. And so we define what are the best trending pairs. And so the first one is the most recently trending pair, the second one is the second best, and so on and so on. And then after that, we provide also for each day of the coming week, for each day, Monday, Tuesday, up to Friday, what are the pairs we can focus more attentively depending on the news release we have during the week and during the specific day. So We provide also informations about the global context, because analyzing the global context represents a task which is rather important. And I do that task myself for my own trading objectives and needs, and I provide these information to our members with monthly subscription. It's not a free information because it represents a lot of work, and I propose two types of bias, so global context bias or max advantage bias. A bias for day trading, for a series of pairs, stock market indices, commodities, bonds, and even the VIX for the S&P 500. And so, I provide these bias generally a few minutes after the London Open. There may be possible, it is possible that sometime during the day, a change in the market bias may happen when the market sentiment is shifting, for example. And so if this is the case, so I add another direction, so when the moment is due. And whenever a bias is indicated, there is a timestamp which is automatically set by the tool in order to remember later the next day or any number of days later when the bias has been established. So, and then for those of you who trade higher time frame, for example, the 4-hour time frame, the daily time frame, or even higher, I also provide such a directional bias, taking into account essentially the fundamentals, in fact, the fundamental driving factor, but this time for the 28 pair, the now six stock market indices, 2 commodities, gold and crude oil, 2 bonds, the US 10-year Treasury bond and the Euro bond, because these are the instruments which are available on some MetaTrader platform, and then the VIX S&P 500, but for long-term trends, so trading, long-term trading. So just to recap what I have said in terms of potential result you can expect with the MAX before I give the mic to my friend Chris. So when we consider trading the MAX, because this is my preferred time frame in the 500 time frame, the winning rate without the max advantage bias, so without the global context analysis, is around 70 to 75%. It may be sometimes lower when we have very bad market conditions for a few moments. It may be higher when we have especially a good market condition, but also if we trade higher time frames. So the winning rate can jump up to 80, 85, 90%. But if we take into account the global context with the max advantage bias, the winning rate jumps between 90 and 95%. So this is extremely important to take into account the max bias advantage. The max primer now will provide between 3 and 5 trades per day in general. When we get a winning trade, the result will be between 0.5 to 1 to 1 reward to risk ratio, and a losing trade will have a result between minus 0.2 to 1 to minus 0.6 to 1, on average around 0.4 to 1 negative. And for the max standard, we will get between 1 and 3 trades per day. And when I say between 3 and 5 trades per day for the max primer and 1 to 3 trades per day with the max standard, it's with just one pair. The winning trade will give a profit between 2 to 1 to 5 to 1 in general, and a losing trade will be approximately the same as the max primer. The extreme will be a bit larger because we have the scaling process. When we add scaling and we have a losing trade, this has a tendency to increase, in fact, a little bit the loss of losing trade. But with these numbers, you can, if you make some calculation, you can see easily that the expectancy of the max primer and the expectancy of the max standard are both positive. So they represent profitable trading system. So this is my presentation of the max. If you have a question, post them in the question area and we will answer them, to all of them. And now I give the mic to my friend Chris, who has some other important information to provide you with. Chris, the mic is yours.
Hi everybody, I'm Chris, based in New Zealand, partner with Craig and Eusebio. Early morning here, hence the coffee, but sorry about that. And hi to all the maxes out there listening. There's some in the room at the moment. this is our 76th set of courses. So we've been around, like Craig said. So why are you here? You've all got your own goals, and especially with COVID running around out there, a lot of people have lost their jobs and are looking for another way of getting income, paying medical bills, especially in the States, or keeping food on the table. It's in some places it's not good out there. Things are beginning to lighten up a bit sometimes, but we'll just have to see on that side of things. But trading can be a way of giving you another income, either a minor income or a very major income. Next slide, please, Eusebio. We used to sort of go on about how you could use it for traveling and setting up new businesses, etc. But it's changed a bit these days. I also have to point out that this is not a get-rich-quick scheme. A lot of people think, just look for the two moving averages crossing over and then get in and make a bundle and everything will be happy. There's a lot more to it than that. You have to know when to do it, what your level of risk is. And so when I asked Eusebio yesterday, what are the main points if you were in an elevator and you had to do an elevator pitch and convince somebody of the max and taking it up, he didn't really do the glossy brochure explanation. He said, well, we have a total approach to the market, factoring in all facets of the market. We have a clear and defined trading process, and we've got powerful money management and risk management, which sounds really dry and boring, but that's what sticks all this together. This is, it's not just about indicators. You have to look at everything in the trading world. Well, not everything, but you have to have a comprehensive view of what you're actually getting into before you do this. And the Newswatch, if I had that when I'd first started out, I wouldn't have blown through one or two of my accounts when I was first starting out. The money management is hugely powerful. So, okay. Okay, so there's lots of challenges when you do actually start trading, especially at the moment with the foreign exchange side of things. The markets used to move really well, like quite a very big movements. These days, the ranges aren't so large. The price action can be quite small. During Brexit, there was suddenly changes depending on whatever somebody mentioned coming out of Britain. And in the US, it used to be sort of tweet-driven a bit with things flipping about. So there was very tight ranges and sudden large movements. These days, it's smoothed out a bit, but the movement is still quite compressed. You need to know what direction you're moving in, and a lot of old methods have imprecise setups and very slack indicators. Still don't have that much of an idea about what direction you should be trading in, when you can expect price to sort of take off and so that you can stay in it, or if the price is at an exhaustion point for that particular movement or anything like that, and very little idea on how far the price is likely to move. What we do with the Max here is we teach you the different modes that price is in, like a trend mode or a break, choppy mode, counter trend mode, all those sorts of things, and show you how to watch them or analyze and detect them. And generally within 1 or 2 bars we can say quite precisely, this is exactly this type of mode, and so this is what you should be doing in this for entries. And so we've got very precise an analysis of the price modes so that you know how to actually operate in those modes. With Eusebio's contributions to the Max, we're now able to find many, many more movements, entries and setups and movements, and actually stay in larger movements. I keep saying that a lot of people are greedy. They'll I call them greedy because they make their 10 pips and that's it. They're out. They've made their money. But Eusebio is super greedy. So when price hits the 10 pips, he will stay in there, even if there's a bit of a pullback, waiting for the big movement that's going to pull up something like 50 to 80 to 140 pips. So rather than just being minimally greedy and grabbing whatever crumbs they can get, Eusebio goes for the big greed and sits there at the table eating the feast of all the pips that are there. So we've got ways of picking up those larger movements. The max is very nimble, especially these days, thanks to Eusebio. We can trade in pretty much any direction and find changes in movements, plus their direction backed up their bias within a few bars. Very, very fast ways of getting into the things. That's Eusebio's companion bias working on that level. And if you use his bias advantage, which is a separate subscription, you can get a very high directional information about where the trade is actually going. And so instead of having something like a 70 to 90% win rate on the smaller time frames, with adding in his subscription side of things, you can boost that up to over 90% win rate. So on the training side of things, what we supply you with are very detailed setups. On a 5-minute time frame, what we show you is how to find a setup bar, whether it's an entry or an exit bar, and then within, at times, half a pip to generally around about 1 or 2 pips, we say, okay, you found the setup bar, now's the time to enter, and that will happen within 1 or 2 pips. Very fast, very precise, no fluffy stuff like wait for the moving averages to cross and then get in. Where do you get in? What if price is going against you? What happens if there's a bit of a pullback? Nothing like that. You get detailed setups so that you know exactly where you actually stand. We use hard stops right from the start. I know some real men don't like using hard stops, but if you're going to protect your account and you're going to stay in your business, you need to use the stops. So the stops are there in case, and this happens regularly, the internet goes down, your power breaks. Lately my machine it's getting a bit old. It's been doing a blue screen of death. So if you're in that situation, the hard stops will protect you. Always use them. And we use trailing stops as well, and we use those to manage the risk. So as price is moving along, we're trailing the stop like most people do, plus other things to manage the risk on the trade as well. I mentioned that we ask people to do homework. It's not mandatory, but if you do it, it helps speed up your learning and makes it deeper as well. I must point out that on that previous slide, Brian had written into me and said, I hate homework. And then he said, however, I've come to realize that I have a tendency to grade myself on a large curve. So people are quite biased. And he said the objective feedback is awesome. So people don't like doing the homework, but it's really, really helpful. Okay. So what you get with the course is Eusebio's total approach to the market, all factors. We supply all the indicators, templates, examples, etc. There's nothing else that you need to buy for the course. There can be other tools that you might like, but you don't have to have them. Everything is included in the course. We'll give you detailed information about all the setups and for the entries, the exits, the conditions, the price modes, etc., etc. And like I said, we can give you personal one-on-one guidance in the practice sessions, bar by bar if necessary. And we do that on the weekends, during the course itself as well, and during a homework session as well. And once you've done the course, you have access to the weekend sessions, kind of forever, forever as long as we're forever. We run occasional live sessions, and there's one coming up this week. I think it's Wednesday, or depends on where you are in the world, but Bank of Canada is having a large news item. So Eusebio will be trading through that, and you get the invite to it, like Craig says, and whatever help you want. So even now, we're still getting people coming back from 10 or 12 years ago saying, hey, blah, 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 can you help me with this? And we're still here and still helping them. And on the free side of things, like I said, with the Newswatch, we supply the best pairs to trade each week, which news to avoid, which news to anticipate. And there's some coming up this week, just been through the Newswatch myself. And Eusebio's a sub-selection of his price levels. He produces price levels for something like 36 different instruments each week. It takes ages. We give 4 of them away free for them, just some of the main pairs. And if you want to subscribe to that and see what they're like, you're welcome. If you want to find out how to build them, you're welcome. There's a small fee for that side of things. Okay. When we're running the courses, we use MetaTrader. It's a bit of a clunky system, but it's sufficient. It's ubiquitous, and the feeds are free, and the platform itself is free, and pretty much every broker uses it if you want to start using it. So we use MetaTrader. If you have another platform that you want to use, once you've done the course, we're quite happy to give you the source code indicators for MetaTrader so that you can port them over to your actual platform. So what we're aiming for is you end up with a system that will give you 65 to 85% win-loss rate on the smaller timeframes, even higher if you're going for something like the 4-hour time frame or daily timeframes that you want to trade. The standard course, you get everything in there, plus the ability to boost profits over and above regular courses, regular systems, by 30% to over 300%. And Eusebio has shown you a couple of examples of that. Just as an example, Eusebio and I did some working out the other day, just sort of back of the envelope type stuff. And if somebody traded for 3 days and risked 1% per trade, so, or think of it as a, just risked 1% of his account on each trade, or her account, then after 6 months, if you're using the primer system, you'd end up with about a third to almost doubling your account in 6 months. And that's just with using the 2 basic entries and just a very basic buy and hold system. Whereas with the standard, similar setups, trading 3 days a week, over 6 months, you'd end up with about 1.5 times your original account size to 4.5 times your original account size. And this is just using the basic information that comes out. It goes up really quite a bit over a year, and if you're using the more advanced SAM course, because we don't just stop at the standard course, we have another more advanced courses out of that. The more advanced courses can produce 2 to 10 times more than the standard course, because we have even more refined methods of getting in and getting out, and essentially it operates faster than the standard itself. Gives you more opportunity to scale in. So there's a lot of scope with the Max, and incredibly on the profit boosting side of things, if you need to really ramp up. So the courses that we're offering today are the Max Standard and the Max Primer, going on about that. Standard runs for 7 sessions. Actually, each one of these has got an extra bonus session tacked on the end of it, just to show you how they operate. But Standard has 7 preset sessions, whereas Max Primer only has 2. They run concurrently to start with, so Max Primer is a subset of Standard. Standard has got multiple entry scenarios. Primer has only got a couple of basic entries and a few exits, so not quite as comprehensive as Standard. The Standard has got the profit acceleration side of things to boost profits even more than 3 times. in those examples that Eusebio showed you today, I think the results in one of those charts was over 4 times what the primer was able to produce. Primer still produces stuff. It's profitable, but it's slower. You have to wait for the setups to come along, and when you get into them, you sit on them until they actually produce the money for you. With the standard, you work them and you milk the trend as much as possible. And so with primer, you've got basic risk management. It's still good. It'll keep you out of trouble. But with the standard, like I said, it's exceptional. It's yep. I'll just leave it at that. Next slide, please, Eusebio. So what we're waiting for, nearly coming up to prize giving, is the standard course starts on November the 4th. So this week we've got a free session, and then next week we have the course starting itself. It runs for 7 weeks, like I said. Normal price is $3,000. Webinar special is $2,399. And with that, you get all the weekend workshops, as much support as you want. Homework assignments if you're going to do that. And if you're going to get the most out of this course as possible and ramp up as fast as possible, then really, really do recommend that you do the homework. It's kind of essential. Next slide, please, Eusebio. The primer course, also, like I said, they run concurrently, is on November the 4th. Normally, its price is at just over $300. The webinar special is $159. Only runs for two weeks. You get minimal information. And having taught the 2 courses myself and watching, I do a lot of the homework grading. I see that people that do the standard course get ahead much more easily than the primer course. Because you're immersed in the standard course for the 7 weeks, you get pummeled by all the information over and over and over. And so it goes in deeper and faster and sticks. Whereas the primer course people tend to, it's the same information, but because it's not sort of in their face as much, that they have to work at it a bit harder. So with standard, you're kind of spoon-fed it. With the primer course, you have to do it yourself a bit more. It's more on you. We do still do all the after-course support, so we're still around, but primer just has that funny little bit. It's just a little bit harder. It's interesting. Just a reminder that this is the last course that we're running for this year, and we won't be running any more courses until sometime next year. So now's the time to get into this if you want to start learning how to trade with the Max, how to get a really profitable system. We're going to hit some questions now. So if you have any particular questions for us, please ask them in the question area in the GoToMeeting box. But there's a couple of questions in here already. Neil has asked one. Appreciate that the market is the market and setups happen whenever, but statistically, what session produces a reasonable number of opportunities to trade if you're in New Zealand, which is where I am. And it was really interesting. You kind of hear the market runs for 24 hours and you've got a huge, wide selection of pairs to trade, but it's not actually like that. The Asian session is pretty quiet. And of the pairs that you have to trade, I can't remember how many there are these days, 60 plus if you look at MATAF. But really, there's only a few that are worthwhile trading. On the smaller time frames, at least anyway, because they don't move that much. And so with the News Watch, if you grab hold of that, we'll show you the 10 best pairs to be trading, and pretty much what ones are the best on a particular day. But for when you're here in Kiwi land, really London opens up it's going to start opening up at 9 o'clock in the evening for us now. So we will only get like the morning session unless you want to stay up all night, and the Asian session as well. The New York session is pretty hard to trade because it's when we wake up, it's it's pretty much the US closing session, and it's a dead period. So we're at about the worst part of the world to start trading in on the foreign exchange market. But you still can. It can still be quite profitable, but if you don't want to stay up all night, you have to pick and choose. You don't get quite as many opportunities as somebody like Eusebio does, who has office hours for the London session right through to the US session. So he has a whole 8-hour day to pick and choose from the best timeframes, the UK and the US sessions, whereas we get the back end of the Asian and the UK session. But Francis, who is in the room, has been doing really well with the Tokyo session and pulling out 1 to 2 times and more what he risks whenever he trades. So if he's risking $100 on a trade, he'll make $200 that particular day. Or if he's risking 2% on his trade, he'll make 4% or 8% on his trade, just from the Tokyo Open session. Okay, I hope that helps, Neil.
Yeah, let me add something, Chris, about that. Indeed, during the ASEAN session, so indeed the best pairs to trade are the pair containing one Pacific currency, so the yen, the Aussie, or the Kiwi. And especially when there is an event influencing the market, for example, a news release or an unexpected announcement by a central bank or some geopolitical event impacting the yen, the Aussie or the Kiwi, then you can have very, very nice opportunities. Otherwise, usually the range during the ASEAN session is between 25 and 50 pips usually. But even with a movement between 25 and 50 pips, you can make some decent trades. But it's true that the best opportunities happen during the European session because it's always a question of available liquidities in the market.
Should also point out that we focus for our particular trading on the smaller time frames, like the 5-minute or the 15-minute charts. If you're trading longer time frames, it really doesn't matter then. You can spend multiple days. Like a 4-hour trade can go on for a week or two. A daily trade can go on for months and months. And in those ones, you can pick up, use multiple instruments at the same time. So it really doesn't matter about what time. But on the smaller time frames, that's what I was actually, what we were focusing on just then. Okay. Let me see. Oh, I didn't mention it, but if you ask Craig nicely, we also do drip feed. So if you wanted to pay in installments, Craig can arrange something like that for you as well for the courses. We're not that good at selling here. The Max is one of the worst marketers out there, even though we've got one of the best courses available. Okay. How many hours does Thursday at 3? Paul, I don't quite understand. Like, how many hours does a training session take? Generally around about 3 hours per training session. Some can be longer. Most times around, starting from the 3-hour point onwards. Everything is videoed as well, so you get the video straight afterwards. Okay, what's the name of the, the Simeon's asked, what's the name of the indicator used for divergence measurement, and what's the setting also? It's just we use the stochastic RSI for some of the divergence settings. We have, and standard, we've got multiple momentum indicators, and they each kick in at different times. But if you just use a regular stochastic, the basic settings are fine for divergence. You want to say more about that, Eusebio?
Yeah, in fact, the key point is not an indicator itself. You can use any types of indicator you want, because remember one thing, no indicator, technical indicator, predict the price movement. An indicator is simply showing what the price is doing now and what the price has made in a very recent past. However, when you use an indicator or when you use a combination of indicators with appropriate settings, of course, because you have to be prudent how to combine several indicators. When you know how to use them to pinpoint possible risk situation or risky situation, then they become effective tools. And this is what we teach in the MAX, how to combine indicators together and how to fix their settings and how to use them. In fact, this is one big subject in the course indeed. Otherwise, you can use 10 indicators and you will get no better result. It's a false concept to consider that if you use indicators in a random way, they can be combined together to give you more confirmation, more confluence. That's completely false, completely wrong.
Support resistance boxes as well, where price jumps from one range to another. And Eusebio has given us a way of sort of defining those so that we can get an idea on where price is likely to go to or where it's likely to be contained in. Okay.
Yeah, and that technique helps to understand that, for example, the Fibonacci numbers do not work in the market, Fibonacci extension or retracement. But just two of them are working. and I explain why in our scrolling party.
Okay, but we don't mention Elliott waves to Eusebio because
there are some forbidden words.
Okay, but I mean, I really like them. I used to follow them for ages, Eusebio.
No, of course, when we say forbidden words, so we are just joking, of course.
Yeah, and it's to each their own. So some people have their eye for Elliott's, others for channels, some for indicators. So it depends on what you actually like. Okay.
Yeah, in fact, you have to consider the following point. The market has always a certain number of driving factors, short-term driving factors, medium and long-term driving factors. Any tool you can use any tool, provided these tools help you to time your trade. And this is key. A tool or a set of tools helps you to time your trade, but the direction of your trade is given by your understanding on the context, because the context drives the market. And I can give you, if we have 2 minutes, I can give you just some examples. I can show you what has happened, for example, last Thursday, when I have established for the last time of the week these directional bias based on the global context. Do we have 2 minutes to show that, Craig or Chris?
Okay, sure, shoot.
Okay, so let me show just a few examples. I will consider this chart. A simple chart, a simplified chart. Just a moment, it's coming. So, do you see it now?
Yep.
It's crude oil, so it's another commodity. And my bias, so these two wide vertical lines represent my trading session, a few minutes before the London Open and the London close. Thursday, I have closed my session a bit earlier. My global context for the crude oil was to trade crude oil short. And look here, at some moment, the trend has reversed to the downside, giving a very nice short trade, easy to trade. So this is just an example. The euro yen, the bias was short also. For a large period of the European session, the price has moved sideways, and suddenly the trend has reversed, giving a nice, easy short trade to take. So another winning trade. Another example, the euro kiwi. The euro kiwi, this time my bias was long, going long on the kiwi. And again, the price for some time has been sideways, essentially, and then the price has moved upward, giving a nice long trade. So 3 trades, 3 wins. Next one, the pound card. My bias was long, and you can see 1 long trade, so here, and another long trade. So 2 trades available, 2 winning trades. Easy to time with our technical bias indicator. The pounces, my bias was short. You can see the chart is speaking by itself. 2 nice short trades. We just need patience, of course. Pound yen, my bias was short. So a very small short trade here, not easy to handle, but then a very nice one here to the downside. So again, indicated by our companion indicator. The pound kiwi, my bias was long. A small long trade just a few minutes after I have established the bias, but then a very nice long trade later on in the middle of the European session. And so you can understand why the winning rate is so high when we take into account the context. The US Treasury bond, the 10-year US Treasury bond, my bias was long. For some time, the price has dropped. The price of the bond has dropped. And then suddenly, the price has moved in the direction of the bias, giving a very nice long trade. And by another one, US dollar yen, bias was short, a nice short trade. Another one, gold. Oh, gold is another commodity. My bias was short, and then a nice short trade in the middle of the day, and then another small trade later, almost at the end of the European session. So you can see almost all the trades have been winning trade, some with nice profit, some with smaller profit, but all profitable trade. And this is the power of the MAX combined with the global context. So. Yeah, if you have any other questions later, you can always contact us. You have our email address, support@maxtradingsystem.com. When available, you can also Skype. So it depends on the availability of essentially Chris or Craig. I wish you, of course, a lot of success in your trading. I wish you to see in the course, of course. Stay safe, and so have a great weekend. And so see you soon.